Hey, good morning everybody. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review weekend edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com. And you don't even need a credit card. And that's our commercial for this week. Okay, much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. So let's take a quick look at that. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and or sales, and preferably accelerating earnings or sales. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The N in CANSLIM stands for new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term profit. The S in CANSLIM stands for supply and demand and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of their average daily volume on the day that they break out. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. We'll come back to that in a little bit. The I in CANSLIM stands for institutional sponsorship and reminds us that we want to find stocks that the institutional or professional fund managers are accumulating. And finally, the M in the CANSLIM acronym stands for market and reminds us that according to research, 75% of all stocks will follow the market. It's critical for our success that before we begin trading, we understand the current trend in the market. Okay, as we noted, the L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify the market leadership on a daily basis. So let's get started with that. On Friday, of the top 100 most powerful stocks in the most powerful industry groups, 9 came from the biotech industry, 8 came from midstream oil and gas, 8 came from application software, we had 7 semiconductor devices, and rounding out the top 5, we had specialty pharmaceuticals. We've been seeing quite a lot of midstream oil and gas. Oil and gas, I think, probably is a good place to be looking for leadership in this market, as is application software recently. Semiconductor devices, I suppose we've seen a little bit. Specialty pharma and biotech, we've seen a little bit. But where we're really seeing a lot of strength recently is in the oil patch. So you might want to keep an eye on these areas. Let's start this morning by taking a quick look at the Russell 2000. On Friday, the Russell tested combined resistance here between its 50-day moving average and this short-term downtrend, and we failed. We'll see if we can take out that area of resistance today. That would be bullish. And I think that's all I have on the Russell today. We'll watch to see if we can take out this area of resistance. If we do take out that area of resistance, the next significant area of resistance is going to be up here in the 1140 range. Let's see what the NASDAQ Composite's up to. But before we do that, stocks closed sharply higher on heavier trading volume Friday as stock options expired. Option expiration happens on the third Friday of every month and quite frequently leads to higher trading volume. The market advancing on heavier trading volume gave us an accumulation day, or a day of professional buying. Accumulation is bullish and has been sparse recently. Both the S&P and the Russell 2000 tried to break out of recent short-term downtrends but failed, also failing to recapture their 50-day moving averages. The NASDAQ closed above its short-term downtrend. In spite of Friday's accumulation, recent distribution or selling by professional money managers remains a concern in this market. The NASDAQ is still sporting a very high 9 distribution days in the past month. The S&P, which lost a day due to age Friday, has 7. While down from recent extremes, these remain very high distribution day counts. Accordingly, the Investors.com market outlook is indicating an uptrend under pressure. Meanwhile, our market timing models are mixed, with a buy signal on the S&P and a sell signal on the NASDAQ. The buy signal on the S&P indicates that conservative traders can buy, but we shouldn't be increasing margin at this point. In fact, we shouldn't be on margin at all. A sell signal on the NASDAQ indicates that aggressive traders should be off of margin and can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. Friday, advancing issues outpaced decliners by better than a 4-to-1 margin. New highs bettered new lows, reversing the trend of last week. According to our Ramosi ratio, small capitalization stocks bettered large, but large caps continue to outperform on a 10-day moving average basis. Bulls prefer to see small caps outperform. The market continues to struggle for direction. Our swing timing model, which flashed an oversold signal on Thursday, is back to indicating a neutral condition on the market. While the past 2 sessions have been constructive for the bulls, this remains a market in flux. The NASDAQ has broken its short-term downtrend, but the S&P has not. Both the S&P and the NASDAQ are below their 50-day moving averages. Our distribution count is extremely high, and our market timing model for the NASDAQ and unofficially the Russell 2000 remain on sell signals. Continue to be cautious here and keep your stops at their tightest levels. Okay. On Friday, the NASDAQ was up 57.03 points, or 1.21%. We closed at 47.69, and notice how not only did we close at the top of our daily trading range, but we took out this short-term downtrend line. That's a bit of a bullish indication for the NASDAQ. Trading volume on the NASDAQ on Friday was higher than the prior day and above average. That's our definition of an accumulation day. For you followers of William O'Neill, the NASDAQ is in an uptrend under pressure, has been since February 8th, or has been in an uptrend since February 18th, but we still have quite a bit of distribution on the NASDAQ. We have 9 distribution days. We haven't seen a distribution day in the past 3 trading sessions, and that may be a little bit of a bullish indication. Still, All of this distribution that we've seen over the past month is the reason that our uptrend is under pressure right now. According to our market timing model, the NASDAQ is on a sell signal. In order to go to a buy signal, we would have to trade above this upper envelope. This envelope right here is a 1% envelope around our 21-day exponential moving average, which we show in pink. The Russell right now appears to be bracketed by, we'll say, support at its former downtrend line and resistance up here in the 4,900 area. Let's take a look at the S&P 500. The S&P on Friday was up 12.28 points, or 0.60%, considerably weaker than the NASDAQ. That's a good sign for the bulls. The bulls want to see small caps outperform. We closed the trading session at 2052. Notice how we attempted to better the 50-day moving average, which we show in red right here, and we failed. We'll see if we can take that out today. Trading volume was heavier than the prior day, giving us an accumulation day. Accumulation days have been few and far between recently. We also lost this distribution day off of our count due to age. Distribution becomes less relevant as it gets older, and so we remove it from our count when it becomes over a month old. The S&P 500 is in an uptrend under pressure and has been in an uptrend since February 18th. Right now, the S&P 500 remains on a buy signal according to our market timing model. We're bracketed by support down here in the 2044 area and resistance up here in the at its downtrend line. We have minor resistance at the 50-day moving average. Let's take a look at some stocks that we may be interested in watching, but before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted. The first stock on our watch list today is Sabre Corporation. Sabre, which provides end-to-end technology solutions to a broad range of travel suppliers and buyers located around the world, is putting in this cup and handle base with a pivot point up here in the 2976 area. Sabre gets a 72% checklist rating. This is a first stage base and may be worth taking a look at by both conservative and aggressive traders. Next we have HD Supply Holdings. HD was a spin-off from Home Depot and distributes products for the maintenance and repair, infrastructure, and power and specialty construction industries. Stock has been working on this first stage consolidation base with a pivot point in the 3681 area. HD gets a checklist rating of 72, and you could also call this a real goofy cup with handle base. Notice how the volume has dried up here as this handle has been forming. If we call it a cup and handle base, more aggressive traders can get in at the 3551 area. HD Supply may be of interest to both conservative and aggressive traders here. More aggressive traders will want to get in at the cup and handle pivot point in the 3551 area. Conservative traders are going to want to wait for a breakout above this consolidation base in the 3681 range. Friday, Dycom Industries. which provides engineering, construction, maintenance, and installation services for the telecommunication providers, tried to break out of this cup and handle base with a pivot point in the 73.18 range. We tried and failed closing below that level. Watch for it to try to break out again this week. DICOM gets a 68% checklist rating. We're working on a first stage cup with handle base. The pivot point is 73.18. Notice how the volume dried up in the handle, and we tried to increase volume on Friday, but weren't able to really break out at this point. DICOM's a more aggressive name. It only trades 529,000 shares on average, which is right at the bottom of the average trading range that we want to see for our stock. So DICOM may be of interest to more aggressive traders. And the last stock I want to take a look at, Western Alliance Bank Corp., is a holding company for Bank of Nevada and two other banks operating in the Nevada, Arizona, and California areas via 40 offices. The stock right now is working on this first stage consolidation base with a pivot point up here in the 39.11 area, but we have a more aggressive entry down here in the 37.48 range if we call this a cup and handle base. I'm not entirely comfortable calling that a cup and handle base because while we saw some volume increase on the right side of the cup, we didn't see a lot of volume, and this weak volume down in here is a little bit of a concern. Also, with this weak volume down on the right side of the base, the volume in the handle was a little bit heavy. And so Western Alliance, which is a fairly conservative investment, may be of interest to aggressive traders on a cup and handle basis in the 37.48 range and more conservative traders up here in the 39.11 range. Western Alliance gets a 72% checklist rating. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc. its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.